The stock market gets smashed at the 9:30 open with the Qs down more than 20 points as AI inflation spreads around the world, taking the KOSPI in South Korea down more than 10%. And before we go to the charts, I want to first of all start off by saying you have absolutely nothing to worry about. This is a raging secular bull market that began in the depths of hell in March of 2009. It will not end until roughly 2035. Demographically, this is 1991. Back then, it was the boomers and the internet that Al Gore invented that drove the S&P up another 800% in the next 9 years. Now, fast forward to today, it's the millennials and Gen Z, which are twice as large as the boomers, alongside the power of AI, which according to Goldman Sachs is 3x of that of the internet. What we're experiencing right now, being called AI inflation, is one of many bumps along the road. Simply put, there's a product in China called DeepSeek. It's the Motel 6 / Holiday Inn of artificial intelligence. And it's smashing stocks like Google and Microsoft and Palantir and the chip names, including Micron and SanDisk, because there's fear that we don't need all this expensive AI. And the truth, of course, lies somewhere in the middle. With that said, let's go to the charts. 12-month on the Qs, well off the lows of 714 and change. Last trade, 722 and a quarter, off only 1770 as we speak. From a technical perspective, as I said many times, this was a bearish formation in the upper right, head and shoulders. We were working on the right side of that shoulder, and then boom, about a week ago, went all the way up to 746 and a half. That's only $2 shy of an all-time high, but immediately gave up the ghost on a gap fill down to 720. Unlike this gap right here, where just prior to that, the last week of March, we were buying for our retirement as low as 555. If you're new to this channel, welcome. I was a licensed broker from 1993 to 2007. I've made all the fucking mistakes, so you don't have to, including going bankrupt in 08. It's taken me over 30 years to get to where I am today. And just 3 short years ago, I had less than 50 G's to my name. And like some of you, including those inside the Discord, the link is pinned in the top comment below. I now know what it's like to not only be worth 7 figures, but quite possibly 8 before I'm dead and gone and on an urn on someone's shelf. Yeah, I opted to be cremated. I can't change a tire to save my life, and don't get me started on the oil. I couldn't find the valve by sundown. But you stick my fucking ass in a chair and you pay me $7 a day. A cup of coffee at the local Starbucks, I'll make you fucking rich inside of 3 years. How am I able to say that? I've done it myself. We have a 97.5% win rate in the last 12 months, over 150 wins against only 5 losses. In the last month and a half alone, you could have more than doubled your money. I gave you CDT, not once, but twice. You could have bought it initially at 69, sold it at 2, bought it back the next day at 87, blown it out at 2 1/4 yesterday. We only buy ETFs like the Qs when we're down at 555. We hoard cash 11 months out of the year, and we only buy after the 10% drawdown. Before that, it was the fake trade war over here all the way down to 400. Our average that in that year was 435 on the Qs. It was 562 this year. So unlike the fools that were buying or had to, unfortunately, way up here at close to 750, the last 2 tranches for our retirement are up nearly 300 points. We combine that philosophy of buying indexes and ETFs like the Qs, SPY and IWM, with trading small cap stocks. I think you should have at least half to 2/3 indexed. Only buy after the 10% drawdown. You hoard cash 11 months out of the year. I will stop you from panicking at the lows and getting all FOMO'd up like some fucking idiots were yesterday near the highs. And because we only buy small cap stocks, most of them under $5 a share, aka penny, with the vast majority under a buck, that are gutted, down 90, 95, 99% or even more. RSI, stochastics, MACD flat on their back. Our portfolio has been somewhat de-risked. We only buy index funds and ETFs after the big correction or bear market, and you only get that with an accompanying recession. We have nothing of the sort right now, so this is a blip, a minor bump on our way to 800, 900, 1,000 or more in the queues before Trump leaves office. But then we scale into small cap stocks like CDT. I gave it to you 2 days ago. In fact, if you're following on the home wall of YouTube, I gave you SpaceX at 150. I told you to fucking sell SpaceX at 2.25. But you could have bought this stock a week ago, down here at 70 cents, blown it out with us. I got out at 171 to be exact. It came all the way back down to right here. I chose not to buy it at 87, but I did point it out in the Discord for the Peacocks. And of course, they blew it out the next day, as high as $2 in the real early pre-market. But even after the 9:30 open, you could have gotten out as high as $1.90. WGRX, BATL, we were buying BATL at what, 138? It went to 265 in a matter of a week. I don't know how many fucking times in closing I have to come to you and basically say the same thing over and over. This is a raging secular bull. The prior two lasted 27 and 26 years respectively. You can't stop a demographic freight train. I don't care how many fake trade wars, mini wars, 60-day negotiations, soon to be aliens, a fucking nuke going off. It cannot stop what's already in the cards based on demographics, 401ks, IRAs, and now that they removed the $25,000 limit on day trading, holy shit, there's more fuel for the fire than ever before. And the Fed chair that Trump appointed, Kevin Warsh, is on record of saying rates need to be lower, not only to refinance our debt and lower our interest expense, but to give you, the consumer, access to $38 trillion, almost as much as the national debt of $39 trillion in home equity. Mark my fucking words, now that oil's back down to $73 a barrel and going lower, in the next 6 months towards the end of the year, especially at the beginning of next, they're going to go on a campaign, a crusade worldwide. And everyone's going to admit we're insolvent. We can't fucking pay the interest on our debt. And there's a lot of equity tied up in the housing market. So we're going to systematically lower rates as more and more people get unemployed as a result of AI. And the productivity gains associated with AI will drive inflation through the fucking floor. Mark my words. And you're seeing it in silver. And didn't I say sell it at 117, rebuy it at 61.78, sell it again at 90? Yes, I did. And I put out a post inside the Discord today. We're a bit all over the map. When you're up 22x in the last 2.5, 3 years, you got a right to do so. Silver's going to be a buy again real soon. Gold in the 37, 3,800 range. And until next time, I hope this somewhat helped you. And thanks for watching.